Aloha and welcome back to the week that was. I am your host, Colin Edsman, and what a week. I mean, it's always a week, isn't it? There's never a dull moment trading these markets, especially recently. And this week gave us a lot to work with. Netflix beat earnings and the stock got crushed anyway, down as much as 12%. Semiconductors had their worst week since April 2025 tariff meltdown. Not because of tariffs this time, though. Because of a Chinese AI model nobody outside of the industry had heard of a week ago. Oil spiked 13% on the week after Trump reinstated a blockade on the Strait of Hormuz. The big banks posted the best quarterly numbers in their history, JP Morgan's biggest profit ever, Goldman's best quarter ever, and the stocks basically shrugged. And Kevin Warsh gave us his first testimony to Congress as Fed chair. That's a full year of headlines crammed into 5 trading days. And over at the Kairos Agentic desk, we closed out a clean winner on Phillips 66 this morning, right at our profit target. We also had a bit of a red flag on the new wheel income sleeve that I instated that I want to talk about honestly, because that's where that's what we do here, right? We talk about the wins, celebrate them, and we talk about the mistakes. There's not really a big spin to here. Quick one for the chat though, before we dive in. Where are you where were you most shocked by the Netflix dropping it on the beat, or by the banks posting record profits and getting ignored? Drop it below. I want to see where your guys' heads at. As always, though, aloha. How are you? I hope you're doing well wherever you are, whenever you are. Here's the rundown of the show. Top 3 stories, market movers, and a deeper angle underneath it all. And then we're going to talk about agentic trading and some of the updates that we made there throughout the week, and what we're bullish on heading into next week. I'm an unyielding optimist, pragmatic, but pretty optimistic, because there's always a bull market somewhere, right? But let's get into it. Netflix beat the number and the stock basically got punched 9 to 12%. Netflix reported Q2 earnings on Wednesday after the bell. Revenue 12.56 billion, up 13% year over year. Just a hair under 12.59 billion, which they were estimating. EPS 80 cents actually beat versus 79-cent estimate on paper. That's a fine quarter. The stock dropped as much as 9% after hours trading and kept sliding, down 10 to 12% by Friday morning. There are 3 things that happened at once. First, guidance disappointed. Netflix guided Q3 revenue to 12.9 billion and EPS to about 82 cents. Both a little short of what the street wanted. This is the second straight quarter of, decelerating growth. That's the pattern the market is now pricing in, not the quarter that just happened. Second, and this is the one that actually spooked everybody. Netflix said it's cutting back on how often it publishes engagement data. The quote, "what we watched," close quote, report, which used to come out twice a year, is going annual starting 2027. When a company pulls back the frequency of the exact data investors use to judge whether the content pipeline is actually working, the market doesn't give the benefit of the doubt. The read was simple. If the numbers were getting better, they'd, show better. But they're not getting better. Now, here's the third. And the context matters on this one. The stock was already down 45% from its June 2025 high coming into this print, having wiped out roughly 257 billion in market value along the way. There was no cushion of goodwill left. The options market had priced in 7.9% implied move going into earnings. The stock blew through that. Here's kind of a takeaway here, though. Netflix isn't a broken business. 13% revenue growth is still real growth. But the premium multiple the stock carried on, the we're the permanent streaming winner, is getting repriced in real time. When a company reduces investor facing transparency right as growth decelerates, that's a signal worth taking seriously, whichever side of the trade you're on, right? Because that's all that really matters here. What side of the trade are you on? But here's a question for you. Have you ever held through a beat the stock, held through a beat, but the stock still tanked? Kind of an earnings reaction? Let me know. All right, for our next story, AI chips and other chips still taking a hit. Worst week for semis since April 2025. And it wasn't tariffs this time, like I said. AMD fell as much as 5% Friday morning to 477.81. Intel dropped 4% to 93.24. Nvidia slid 3% to 201.60 and Broadcom slipped 2% to 366.51. The Philadelphia Semiconductor Index actually crossed into bear market territory intraday Friday before pairing losses. Dip buyers kind of stepped in. Globally, semiconductor stocks have now shed roughly 3.3 trillion in market value since June 22nd. There are two things driving what's going on here. First, the Chinese AI startup. Now, I'm learning about this just as you are. It's called Moonshot, released a new model this week that benchmarked competitivity with the leading US labs. That's the same playbook we've seen a few times now. A Chinese lab shows up with a model that's good enough, using meaningfully less compute than expected, and the market immediately re-asks the uncomfortable question: how much GPU infrastructure does the world actually need if efficiency keeps improving faster than demand? On top of that, Bloomberg reported Alphabet's next gen Gemini model as running behind schedule. Another crack in the AI build out is an unstoppable and on time narrative. Second, this trade was crowded. Money was piled into semis and AI infrastructure names for the better part of 2 years. TSMC's own results this week were strong, but their capex guidance renewed worries about campaign compression across the whole chip supply chain. When a trade that concentrated finally gets a real question mark on it, the unwind is fast, and it's not measured in single digits. Here's my takeaway though. The AI capex story isn't dead. My goodness. Excuse me if you can hear my dogs speaking in the background there. But the AI cap story isn't dead. Fed Chair Warsh himself called data center and AI infrastructure investment, quote, the most striking feature of the current economy, close quote. In his testimony this week, more on that in just a moment though. But just buy the semis and hold, stop being a free lunch this week. The next leg needs a real catalyst this time, and NVIDIA print that reaffirms the demand curve or a use case that reignites conviction. Neither showed up this week though. Man, Whew. Rest in peace, Intel's 138 high. But we'll be back there soon, right, gang? We hold and we keep going. If you were following the show at all, you kind of knew what this was happening for a couple weeks now. I'm not shy about telling you where the market is going from my perspective here. Because, yeah, okay, I put up a script because I have to compile all the information that I'm trying to give you every week, right? So, excuse me if I slip a word here and there. But at the end of the day, we kind of knew this was happening. Nothing goes up forever, right? And that's why we try to adapt and create systems, strategies, agents to do this kind of stuff for us without the emotion, without the FOMO, without the, oh man, it's falling 20% in a day or 25% like IBM this past week, and then just panic selling. We don't do that, right? Well, we do. But they don't, right? They follow a system, they stay disciplined. But here's the next story: geopolitics, the Fed, and the banks, the three-ring circus on Tuesday. This is really one story with three fronts, and all of it within about 48 hours. First, of course, my least favorite thing to talk about: the Strait of Hormuz shock, or the Strait of Hormuz at all. Monday, President Trump announced the US was reinstating a blockade on the Iranian shipping through the Strait of Hormuz, plus floated a 20% toll on cargo moving through the strait. He walked the toll back like a day later after the shipping industry pushed back like hard. But oil ripped anyway. Brent jumped as much as 9.5% to above $83 a barrel. WTI topped $78 by Friday. Also, WTI had closed the week up roughly 13.4% near $81. Vessel tracking data showed real traffic through the strait declining, even as the administration insisted it remained open to non-Iranian shipping. Ugh. But Kevin Warsh is still getting used to his super weird name. And I'm from Hawaii. We have super weird names. And Warsh is still... it just sounds like Wario, right? You play like Nintendo and Mario games? Warsh? Wario? Uh, whatever. Just kind of nerded out there for a second. But Kevin Warsh, first testimony as Fed chair, Tuesday and Wednesday. Warsh delivered the Fed's semi-annual, monetary policy report to the House and the Senate. His message, quote, "The inflation surge of the last 5 years will be a thing of the past." Close quote. If the Fed gets policy right and the FOMC has their, quote, "no tolerance for persistently elevated inflation," close quote, he also announced task forces on Fed communications, balance sheet policy, and data quality, stacked with names like former Walmart CEO Doug McMillan, yep, and Mark Anderson. Yeah, he flagged AI-driven data center construction as the standout feature of current business investment. The inflation data threaded the needle, though. June CPI out Tuesday came in cooler than expected. Everybody saw that across the news, even the White House was pumping it. Headline: down 0.04% on the month. Annual rate 3.5% versus 3.8% expected. Core down to 2.6% year over year. Gas prices did most of the work, with the energy index down 5.7% for the month. Wednesday's PPI backed most of that up. Final demand producer prices fell 0.3% for the month, though the year over year print is still running on a hot 5.5%. And the banks blew the doors off. JP Morgan posted a record $21.2 billion quarterly profit, the biggest in US banking in history. with EPS of 6.14 against a 5.85 estimate. Goldman Sachs had its best quarter ever, EPS of $20.98, nearly double a year ago. Wells Fargo beat too, its first full year of operations without the Fed's asset cap, and yet the stock reactions were muted to negative. Goldman down about 1.2%, JP Morgan down 0.6%. Bank of America down 0.5%. None of it moved enough to trigger our post earnings options criteria on my agent desk, or for me at all. Record results shrugged off, and because the Strait of Hormuz headline and the semis unwind were eating all of the market's attention for basically the same 48-hour day or 48-hour period. So you had genuinely good news, is kind of why that matters. Cooling inflation, record bank profits, a Fed chair projecting confidence. Competing against genuinely bad news, an oil shock and a crowded trade unwind, landing in the same 48 hours. That's why the week felt so schizophrenic. The fundamentals under the hood in a lot of the boring economy were fine. The headline risk sitting on top of its, not. Here's the takeaway. Don't let the Strait of Hormuz and semi headlines fool you into thinking the whole economy is cracking. It's never the whole economy. Financials just posted their best quarter in history. Inflation is cooling. This was a sector and geopolitics story, not a systemic one. Well, so far. All right, chat. Which of these three is the one you think we're still talking about in like 6 months? My money's on the Hormuz, as much as I hate talking about it. Energy stocks have a way of outliving the news cycle that started them. All right, let's get into our market movers. I hope you guys are doing well. Thank you for sticking with me so far. Let me bring up the chart real fast for you. All right. Now, S&P 500 down roughly 1.5 to 1.6%. NASDAQ down 2.9. The laggard, all the semis and the Netflix pain. Dow down roughly 0.9% to a full percent, buoyed by financials and the reshuffle toward value. And the VIX sat in the mid-teens to high teens most of the week, elevated single name and sector volatility, but not a broad panic. Now, here are the winners on the tape. Healthcare up 2.2% XLV for the week. Merck was the standout with the FDA approved first oral inhibitor for high cholesterol. I'm not going to try to pronounce it. Well, you know what? Let's give it a shot. Lipfendra. Okay, that wasn't so bad actually. Okay, so the FDA approved Lipfendra. Honestly, though, all these drugs are just like gamer tags on a game, aren't they? You can't overlap the name whatsoever. Like Lipfendra? Okay, whatever. The first oral PCSK9 inhibitor for high cholesterol, and the stock jumped from 124 to 127 on the news, with analyst targets running from 138 to 155. Guggenheim reiterated a buy. Bristol Myers also had a strong week, riding on oncology pipeline. Ugh, the heck with cancer. Energy, though. XLE up almost a full percent for the week, 0.92. Oil above $80 on Hormuz, and refiners specifically caught a bid as tightening gasoline inventories widened, crack spreads, and but Phillips 66 got upgrades from Mizuho, outperformed to 212, and Citi raised to 204. So congratulations to the agents for finding that company I've never heard of. And not for nothing. That's the exact stock that, well, our agents over there at Kairos picked out, right? So good on them. All right, now financials. Technically green on the week, XLF roughly flat, 0.3%. Even with muted single day reactions on record bank earnings, the sector is quietly doing fine. Congrats. Here's the losers on the tape. Netflix. Oof. You're never getting rid of your Netflix, right? I mean, I can't think of anything that's going to replace it. Actually, you know what? If Roku could start getting better and better and start grabbing more of the stuff that Netflix doesn't want anymore, we could see Roku taking some of that market share. Especially with what we talked about a couple weeks back with the Fox Roku merger. Who knows what we could see? But Netflix down 9 to 12%, depending on the day that it was, well, the day you were looking at. Semiconductors, the whole complex, AMD, Intel, Nvidia, Broadcom, all down mid single digits to worse on the week. Ugh, it's always so bleh, hate it, bummer. Blah, bullish, let's go, turn around, let's make more money on that, right? NASDAQ, broadly, AI adjacent names drag the index lower, obviously, right? Even the Dow held up comparatively well. I mean, I don't really cover a whole lot of the Dow, blah, right? Feels like an old person's gauge. Genuine rotation is what we're looking at, though, to stay on subject here for a second. Not a broad sell-off. The key, though, here, this was a sector rotation week, and I told you that last week and the week before. I told you this already, but not. It's a rotation week, right? I told you this. Like, just listen next time. If you're getting kicked in the teeth because you didn't listen to me, well, too bad. That's on you. I told you the money had to go somewhere. Receivers had to be had. Hello? Bah, whatever. You're gonna do what you're gonna do. Maybe I listen to me, right? Maybe you're gonna listen to me just a little bit next time. Not financial advice. I realize the disclaimer didn't run today. I'm gonna have to remember that next time. You know what a disclaimer is. I'm not a financial analyst. I'm not a licensed professional. This is just all opinions from my beautiful brain. But back to the subject at hand. AI infrastructure and semis and into names in with tangible near-term cash flow stories is what we're talking about here. Money moved out of the most crowded, most narrative-dependent trade. Duh. Even people who don't know jack about AI are complaining about AI. Trolls everywhere. And the more ridiculously uninformed you are, the stupider the comments are. Yes, there are caveats. If you use AI, congratulations. If you're overusing it, don't do that. If you're using it to build something that you could never do by yourself, that's what AI is for. It's an incredible tool, but it can be misused. But the infrastructure isn't going anywhere. The Fed is pricing that in. And with the FDA approvals and refining margins, record bank earnings, if you were concentrated in chips or Netflix, this week probably sucked a little bit. But we'll be back, right? You're going to be okay. You didn't have your whole port in Netflix, right? Right? Right. If you weren't, though, the tape barely touched you. It's kind of a meh week. I mean, most of our positions all kind of meh, right? Closed out some covered calls in my personal portfolio. The agents started doing their own covered call fun here, right? So it's all been a pretty good week. It's been a productive week outside of the markets, and that's okay, right? You're not going to be on the markets all the time. You don't want your portfolio just keeping you attached to that little line that goes up and down every day. Right? Remember, these are all just zeros and imaginary numbers until you actually take the money out and utilize that capital for something, right? That's the only way your positions and your profits become real is when you utilize it for a goal that you set. Now let's get into the deeper angle behind everything here. And let me just double check my mic wasn't just completely punched out of the way here. Mm, Yeah, okay. So we're going to zoom out here for just a second because there's a real thread connecting all of this, right? It's all kind of, well, together. The AI trade is hitting its first real credibility test of the year. Like I've been saying for weeks, we got to show me the money, right? That's where we're at this point for AI. I love it. I utilize it, obviously. But show me the money. Like, you got to make sure you're utilizing it correctly. I can understand even some of the traders out there are overusing it as well. You got a full 250 Claude plan and you're losing money on your trades. I know it's happening. You know it's happening, right? But we can't be doing that. You got to make sure you're profitable. When you're using AI and you're paying a subscription, bake in that subscription into your profits immediately, like a salary for your agents. If you're paying the $20 one, great. If you're paying the 151, great. If you have to go and get some extra tokens midweek because you didn't get blessed with some random Claude reset midweek, that was cool. We got like 2 weeks of Claude tokens in 1 week span. Congratulations. Also, side note, I think Fable is getting a its own subscription, Fable 5. So that's interesting to hear. Now, I'm not going to sit here and like I've been using Claude since its inception because I haven't. But I've been using it for a while now and I'm really enjoying it. I bet a lot of you are too and getting a lot of use out of it. But let's get back to this for a second. AI isn't, it's not because AI isn't like real, right? It's real-ish, like that money I was just talking about. It obviously is real adjacent. We run here every single day. But the market's pricing an AI infrastructure that has to run on one assumption for 2 years, that demand for compute only goes up, and that the chip stack is the guaranteed toll booth on that highway. We're going to talk about Moonshot's model this week and Gemini's delay. They are both cracks in the quote, infinite demand, no efficiency gains, close quote, version of this story. That doesn't kill the thesis at all. It does mean the phase where everyone piled in on faith or hope. Hope is not an investment strategy. And if you go in that alone, that time is ending. And the phase where the market demands proof, real margins, real revenue, every dollar of capex, that time is starting now. Meanwhile, look at what's actually working. Healthcare rallying on the real FDA approval with a real revenue number. A energy rallying on refining margins. You can calculate this quarter. Banks posting their best results ever. None of that is flashy. All of it is real. Current quarter cash flow, not a 2030 promise. And on top of all of it, you've got a new Fed chair. I'm not going to use his name anymore. It's just too hard. Trying to, well, establish credibility in real time in these markets. Shout out to Wario. Warsh. It's Warsh, not Wario. Now it's stuck in my head, chat. Damn. Well, Mr. Warsh spent his first testimony committing hard on the inflation fighting reputation while simultaneously calling AI capex the most important thing happening in the economy. That's a genuinely tricky needle to thread. You can't cheer the AI build out as the engine of growth and also worry that the slowdown in AI spending could crack the market's foundation. Both are, well, both are true right now. Here's my read though. This isn't the end of the AI story. It's not going to be for, well, ever. It's the market growing up and asking the story to start, well, cashing some checks. The names and the sectors that can show real numbers this earnings season come out of, well, and come out of the other side stronger. The ones running purely on narrative, though, are going to keep getting punched in the teeth. Like McGregor. Well, he sort of took a punch, but that knee, oh my God, just, okay, I can't not sidebar to McGregor's fight. Max Holloway, blessed is best. But that sucked that he had to win on a technicality because McGregor's old man knees gave out 69 seconds into the match. And now he wants to, what? Refund everybody's money on their predictions and their bets? No. Connor, no. If you were sore, you should have cut out ahead of time so that the trades could have, well, balanced out in real time as a no contest. But no, you decided to go in there for a minute and 9 seconds. Foolish. But here, back to this. Here's the life angle on the whole take, because that's the part, well, that matters here. This is the same lesson whether you're trading a portfolio or building, well, anything. Agents, a house, a car, a business, a body of work, or building a legacy. Hype gets your attention, for sure. Proof gets you longevity. Eventually, somebody's going to ask to see receipts. You want to be the one who has them ready, right? Ugh, my goodness, though. It's AI is going to be part of our future, but people have to make a profit here. We can't just keep riding a high of it's never going to go down. It's got to come down. People got to pay bills, right? Competition's going to come in. We got Moonshot to worry about here. My head was deep inside of Robinhood Chain this week too, so I missed some of this. You missed some of this. Did you know about Moonshot? Probably not. Because if you did, you probably would have bought it if it's even a tradable. I don't even know. We're going to find out more about Moonshot as the weeks come and the news comes in. You can't just go and look and read everything. Some things just come towards you and you learn about it, right? Like me, right now. All right. But before we get into the agentic side of this, let's pull up a couple of things that happened in the week. Now, this week was a little wild, so let's see what happened. Oh, yes, let's talk about this for a quick second. Now, if you have friends who are on Robinhood Chain and they're building beautiful things, congratulations to them. Keep building on Robinhood Chain. It's making huge strides in the meme crypto market, in the utility market, all at the same time. It's kind of incredible to watch in real time. And there are some of my friends who are also building coins. And let's talk about one for a second because it's an interesting, fun story. It's almost like an art project that can, well, make a little bit of money on like a fun little story. Or another way to think about it is, um, hmm, oh, like comics. Remember comics and newspapers? Imagine if you could take your fun little picture and actually, well, make a little bit of a profit on it. And then that cute little picture actually helps people somehow. That's what cryptocurrency and meme coins can do. And this one is hilarious. This is Taco, created by Invest with May, our boy Josh. We're going to be seeing him at RIP's Hood Summit this year. So stoked. Bringing my whole ohana to meet you guys. So please, if you see us walking around after the classes and everything, please come say hi, right? We'll go get some coffee, a snack, or something like that. But let's get back to talking about Taco. So if you trade these markets at all, you know that Taco means Trump always chickens out. Now, this is just a funny story. He doesn't always chicken out, right? But sometimes the markets kind of react and then he pulls back something. Like even this week with the Strait of Hormuz toll, he pulled that right back. And of course, the markets kind of pulled back too. But this is on Robinhood Chain right now, and this is one of the cleaner meme setups I've seen. It's got 97% LP burned, ownership renounced, 4% sell tax equals hard-coded burn, so it's going to only get more valuable over time, just like Bitcoin does. 0% buy to transfer tax, and fixed 1B supply. This is kind of cool. Taco's narrative is a fresh L2 Uniswap live meme volume starting to spike. Most new memes are rugs or vapor. You guys know that. You've been rugged before. We all have. This one passes the structural filters that we're all looking for that kill 90% of the projects out there. It's still a micro cap, super small micro cap, thin liquidity, near zero community, other than me and the guy who built it. It's a lottery ticket. So I'm not saying put even a full dollar into this, but come back in a few weeks and see what this has been doing. It's trading at like 0.00003 maybe. Doesn't really matter. The project is built, and this was vibe coded together using Claude and agents, which is kind of incredible. So I mean, I'm pretty stoked to just be like right here on the front line seeing how this works. Of course, the last run we all bought, sold, traded meme coins, Pengu. There's cool. Now that we've covered some of that, let's see. I think there was one other thing. Yeah, that's hilarious, right? It's so good. Because these are all of the current, I want to say mooning meme coins right now. You got Juggernaut, you got Cash Cat, Nugget. There's a bat in there. Oh, Wishbone! Yeah, I'm glad Wishbone's moving. Whiff with Hood. I don't know what that puppy over here with the bow tie is. You know, if you guys know what that is, drop that in the chat. And we got Taco, of course, here in the front, and then you got Fox, and they're talking about Fox as a bit of a mascot moving into the next wave of. Who knows where this is gonna go? I don't know where this is going. This is kind of the first agentically traded meme market, right? So I don't really know. This would all be guessing, but I feel that like if any kind of meme market is going to grow and be long and strong, it's going to be on Robinhood Chain, a company making strides in the long-term department. Like shoot, like how can you like negate that at all? Our boy Steven. This man's changing lives out here. Shout out to Steven. All right, let's move. Here's some of the Kairos information. Perfect. All right. All right, we'll let you guys get excited for that. I'm going to run my book ad for you, and I'm going to take a quick moment to get a drink. I'll be right back, all right? So please stick around, get yourself a drink as well. We've been here for, where are we at? Almost 40 minutes now. We got about 20 minutes left after my ad, so please get a drink, and I will be right back. Aloha and welcome back. Thank you for sticking with me through my little ad about my books. And if you are looking for any kind of investment, long-term guidance, why not check out the book Not Financial Advice, A Guide to a Legacy? As well as if you're looking for something that's more catered to young ones and like nighttime reading, mystical, magic, that sort of thing, check out Oceans of Time. All right, let's get into the Kairos portfolio update for the week. As you can see here, we've got a quick snapshot of some of the things that Kairos did. This is on my X page. If you guys are there on x.com, please come hang out. If you have any questions, please leave them in the chat. Also leave them on the post. I get back to everybody I can. Trolls, friends, community members. I get back to everybody because you guys are all cool. I don't care if you're a troll. Like, it takes a little while to learn how to actually get someone's attention. If you're going to be funny, I might as well get back to you, right? So if you're going to troll me, at least be funny. All right, so we had some gainers, right? PCX closed at our target of 8.56% and above our 8% target. We got a new agent moving through. We got Maya Wells, fake name. I let the agentic desk create these names. It doesn't really matter. But I need to know who I'm talking about because I can't just keep typing in the wheel strategy trader fixed that, right? I'd rather type Maya's trading wrong, fix that. So it's a lot easier if you name your agents. So we've got a total of 10 agents working so far, not simultaneously. They have individual jobs, and we can get into that in a second too. They got a COO onboarding, and this really was because when I added in the new agent, Maya Wells, she was giving me the same original feedback that she couldn't do certain things that I was getting when I first built this over a month ago. And I was like, wait, we fixed this problem. Now you're making me frustrated. So I figured out a way to make sure that each new agent gets onboarded the same way. Like when you go to work at a new company, you go and talk to the new guy and the HR guy, and he gives you the tutorial of the company, things you're going to do, things you can and cannot do, that kind of stuff. So I programmed that to the Michael Obasina leadership area, right? He's also education as well as the COO and onboarding because it makes sense. All right. Now, Michael Obasina is based off a real person. This person is one of my mentors. He's the head of education at Robinhood. Whoa, nope, that says market cap. But if you know, you know. All right, cool. Now let's actually get into some of the details here. So the account value is up. I'd say another 20%, right? And then I added a little bit more capital there through some asset transfers, right? Because now I'm trying to move more capital since, as we talked about last week, the desk is actually functioning and it's functioning really quite well. So I want to say doubled the capital in the actual trading portfolio and kept that particular capital designated for the new strategy, which is profit driven or the wheel strategy. If anybody knows what the wheel is, congratulations, you're making a decent income. Now, full transparency, because that's what we're talking about here. A big chunk of that jump was not from trading, right? Like I said, a lot of the big movements was because I inputted more capital. So I brought in some SPY because who doesn't hold SPY, SPYM, excuse me, and then I cashed that out inside of the portfolio. So that kind of messed things up a little bit, but it made the most sense because that was already in profit from something else. So I just moved the profit from another portfolio over. So that wasn't the agent's call, that was my call. And it's fresh capital being redeployed in the new sleeve. So that particular thing is not the system printing money, right? So don't like, oh my gosh, how did you get 20% in a week? No. That's just the way the portfolio is adding more capital. Really, on top of it, I think we're basically sideways, maybe up not three, like a 0.3 to 0.4% total, because there's a lot of new things going. But here's some of the trades that closed this week, or that the agents closed. Like, I don't really have to look at them a whole lot. I just try to monitor their progress, right? As I add new things, I want to see what's rattling, right? It's like when you drive a car or a motorcycle you built. When you first get it running, you're like stoked because you're like, yeah, I can ride it. But when you start riding it and you get up to a certain speed and you're like, oh shoot, that's not tight enough. That's sort of what we're doing with the agents. Now they're getting up to a good speed, they're deploying more capital. Now I'm seeing what kind of speed wobble they get and what speed they get it at, right? So they're kind of driving in a school zone, right? Relatively safe. And I'm gonna try to ramp it up to maybe highway speed on this account and see what it can pick up, right? It's 10 times faster than anything I could have pulled off, honestly. But Phillips 66 was the winner, up 8.56%. That's the one that I'm honestly real proud of because that followed the system perfectly. Entered July 9th at 189.57 on a clean Ichimoku setup. Fresh TK Bull Cross, clean green cloud, price well above the cloud top, scoring that perfect 50% on the score that the system looks for. And the system and the agents also ratcheted up the stop basically every single day as the stock climbed, right? Just in case it pulled back, you would still get some profits out of it. It ratcheted all the way up from 181 to 194, and this morning the live price hit 205.64, cleared that 8% profit target, and the system fired the market sell, filled it 205.79, 8 days, right? 8% in 8 days. Clean trend, clean exit, textbook sleeve one execution. Thank you, Alex Chen, the sleeve one trader, another agent, right? I'm talking about fake people here, right? If you're just joining in, these are agents, these are not real people. I had to give them names because I was getting confused and I was having a hard time typing in sleeve one trader or sleeve two trader. I wanted to just give them names. So I'm like, Alex is effing up. Go fix him. That's what vibe coding is. If you don't know, that's what vibe coding is. You're like, okay, cool. I'm gonna tell a quick story, blah 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 blah, and then poof, all of a sudden your story shows up, and you're like, wow, I just built that, and then you're like, well, this thing is actually riding a little hard over 20 miles an hour, so then you actually have to get into learning this kind of thing, right? All right, so let's talk about our next position from the agent desk, BDRY, or Break Weave Dry Bulk Shipping ETF. That one got stopped out at our 4% cutout line. Entered on July 13th, top scorer on the day's ETF scan, but by day two, mostly because of the news most likely, the position was down more than 4% unrealized, which breaches our hard floor rule. No hesitation, the system canceled the stop order, market sold, and it filled. The system doing exactly what it's supposed to. Cut a bad entry fast before it becomes a bad week. Right? Sometimes we just get hopeful and we're like, oh no, it'll be fine. We'll just bring it down a bit. We'll just bring it down a bit. We'll just bring it down. Oh, now we're down 20% on position. And you know this. The math works out. If you're down 20%, it takes 30 to 40% gain to make it back, right? Because you're talking about time as well as inflation, right? So it's just not a quick 20%. You got to add money to that 20% you're down. So it's better to cut it at 4% because really all I need is a 5% gain to win that back, right? So that's a manageable loss, and that's what we want to do as traders. But sometimes we get emotional and hopeful. So they don't get emotional, hopeful, hungry, nothing. They don't require jack, just a monthly payment to Anthropic. Thanks. Not an Anthropic plug, not a partnership. There was a SPY call that me and the agents got a bit argumentative over this week too, because they just trade differently than I would have traded it. And if maybe I didn't get into an argument with them, maybe this would have closed profitable. But it doesn't matter. I closed it in a manageable place at about 5%. Yes, it was my decision, not the agents. They entered it on the 13th as an index hedge after the CPI print, and I closed it on the 15th because there was just so much confusion going on there on what they were trying to do, right? Because I don't necessarily want a, what was it? It was SPY 756 call at for July 21st. Okay, I love the agents. They're doing a great job, but I don't necessarily trust them with that short of an expiration quite yet. So I kind of like, oh, no, pick up something a little bit farther out. And I was like, you know what, until I can ride out all the bugs, make sure all the speed wobble is out of this motorcycle, I'm going to make sure that it still listens to my ass, right? Okay, here's one housekeeping item though. A fractional share order of Apple for some reason got bought this week, and it's a huge violation rule. Like even if you're just trying to get in and out of short positions, which sometimes they do, I need them to buy full shares of everything. So it bought full shares and then a partial share, and because of that extra partial share on Apple, it couldn't put a stop. It can't do partial shares, right? So I would have been left with something hanging off there. So the system isn't supposed to place that kind of order at all, and was corrected in the same day. So they did that on their own. They caught it, they fixed it, and then they went in to be like, hey, no more of that, right? No more of that. And then they tell all of the other agents, no more of that, right? So it was basically like a straight up penny between all of the trading that it did on that Apple position. But either way, it was a small mistake. They caught it fast, fixed it clean. But that's the system. It's working out, right? It finds the misses, it fixes it real fast. So net on closed trades week was with one solid winner and one disciplined stop out and one hedge loss, which I cut out. I think they probably would have been fine, but honestly, after that day, which was what, Wednesday, the markets came down, right? So I think I was correct. So sometimes I'm still smarter than the agent still. They're still learning. I'm still a master here. I haven't mastered this. A master keeps learning stuff, right? That's how you know you've mastered something. You keep learning for new ways to master it. So here are some of the open positions right now. Ticker KIE, which is a insurance ETF, which is in the sleeve 2. It's still being held for 16 days now. Now, I'm not stoked about it, but I don't want to keep poking at them like, why? They, for some reason, they think that it's fine. It's up 6.37%. They keep ratcheting up the stop. It's almost there for that 8% profit, but it's almost double the time frame that I want them to hold positions on. So after they get, I might even just have them close out Monday somewhere at 6.5, maybe. Who knows, right? I mean, insurance going to steadily grow, right? There's no downtrend on needing insurance, right? And with it being the SPDR insurance ETF, it's just going to be re-rotating stuff that's good from the insurance industry. But that's not what this is for. That's for momentum. If momentum is stalled out, we need to tell Alex, bro, you've held it for way longer than we're supposed to. Cut it and rescore something that is moving. But that's me and my imaginary thoughts. I have to go and talk to imaginary figures all made out of light, basically, right? I'm just talking in words and numbers. But here's the honest wrinkle. Our CIO, or Stephanie Guild, also based off of a real human being who is one of my mentors, flagged this position for an exit back on the 13th because it's blown well past our standard 9-day max, like I said. We're now in a 16-day plus, and but the sleeves, or the trader running that sleeve, Taylor Brooks, another fake trader. These are all fake people, right? They're following their own rules on how to trigger an exit and when it's breached, which key June breach, or hitting the profit target, none of which have happened. Price is still comfortably above the cloud, the key June is rising, so the position's been held on a technical basis, while the governance question still sits open. Should a healthy trending position get forced out, or out of purely forced out because of purely day count? Or should I just let it recalibrate the question every day until it stops being a yes? Because we shouldn't cut our winners too soon, right? Right? We should let our winners run. And with it being on insurance, I don't see that coming down the rest of this year. So I'm going to just let it keep rescoring every day. But it's held it way longer than I want to. And because of this amount of slots in each sleeve, it's going to be parking in that slot for a while. Comparatively to the Phillips 66 that got 8.56% in a matter of what? What was it? 4 or 5 days? I mean, I don't even remember. We held it so short. Hold up. I want to get this right here. How long did we hold that thing? Entered July 9th. Got out today. So about 8 days. That's half the amount of time that it took to get to where. I'm gonna just let it do its thing. I gotta stop poking at it. Like I have to let it run its course, and then fix it every so often. I can't keep, like, as you can see. I mean, earlier, Kairos is at version 21 at this point. I have redesigned this thing 21 times. But it's still profitable and it's still worth my time, because once it is running and it can get like 21.1, right? I don't have to keep a complete new rebuilds every time. Then I'm going to feel more confident about just letting it go. All right. So they're most likely just going to keep that position anyway. It doesn't hurt me at all for the agent to learn what it looks like to do this, because it's all data that the agents will keep and keep trading on for the foreseeable future. Sleeve one's got 4 slots open due to the fact that we rotated some of the capital into some of the wheel positions, because it just made the most sense because of how long we're holding that other position. It's sort of a teamwork thing here. And then, of course, the new wheel income dex. This one's designed just for pure income generation, right? Just because I can keep the base salary of my agents paid, right? Keep the base fund paid every month, and then the rest is just going to keep momentum profiting, momentum through options, through buying shares, right? That sort of thing. So it went live this week, that third sleeve, on the funding of that SPYM that I pulled from a different one, as well as I moved over open door shares that I was doing covered calls on in a different portfolio to continue the same strategy but automated, because I tested that one for months and it's been working. Open Door's been trading sideways for a really long time. I'm not going to show you the chart because it's really depressing, but long term this company is doing well. But right now it's perfect for trading covered calls and cash secured puts, because it's basically stuck between 430 and 520. It just refuses to go above or below that area, which is perfect for just collecting premium over time. So it's a great low cost stock that I can test this sleeve on, right? Because if you want to test it on something that that won't hurt you if you lose it, right? This is all money that is in the market, right? You have to imagine it's just gone already, and hopefully it's not gone tomorrow. Like when you buy a stupid meme coin, that's not taco. But I want to be straight about it. Like when we're talking about covered calls and having agents do this kind of thing, it doesn't cost a lot of tokens to do this, because they only have to check it maybe 3 days a week. They kind of just monitor if it hits the 50% on the option, they take the profit and then they roll into the next week's expiring option and do the same thing. If they get assigned, they hold that position, sell a covered call above the cost basis, and they just keep wheeling and wheeling and wheeling, right? It's steady, especially if it's a stock that's not extremely violent. Now, when you get into being able to afford more quality stocks, great. But I'm testing the system on stocks that everybody can afford. Like, if you don't know this already, like, this system is eventually going to be designed for everybody. Like, this is something I want to try to share in a way that's not advice, right? Package it in a way where you can give it your goals, give it your life's dreams, and it can help create a trading strategy based on what your dreams are. Like, that's what I'm shooting for here. All this work and all these hours and podcasting with you and just brainstorming all of this, it's really that so that people like my mom or my dad or like grandparents, they can trust that this system will work better than a human, will profit more than a bank account like savings or a CD, and has more liquidity just in case you need that money. Emergencies happen, right? All of these agentic funds can be immediately sold that day, and the capital can be taken out if I need it, right? That's what liquidity is. Word of the day: liquidity. The ability to sell your property. Houses, on the other hand, have far less liquidity and a ton of fees. Like, if you've ever sold or even thought about or even considered selling or buying a home, you know it takes a lot of work. Agents, real estate agents. Oh man, now we're going to get confused. We're talking about two different agents here. Okay, so real estate agents and brokers and stuff like that, they have to go through all of this rigmarole of buying, listing your house, cleaning it up, taking pictures, and then selling it. And then they get 3% on each side. It takes months and months and months. But if you had the same equivalent in stock, let's say your house was worth 200,000 and you have the same 200,000 in a stock you like, the stock will sell today with fees. I mean, Robinhood is commission free trading, so there would be no fees there. $5 a month all year. That's trivial. But a house, that's 6%, not including the holding costs, the staging, the renovations, all that nonsense. You got to pretty it up. A stock, you don't got to pretty that up. So that's what liquidity is. And it's important to consider that these agentic accounts will be, well, liquid, and you can close them down anytime. If you don't like what's happening, you can disconnect Claude right there on the spot and be like, hey, that's it. you're on timeout. Now, I haven't had to do that yet, thankfully. Um, but yeah, so we have open door shares now that I've completely gone off on a tangent teaching you the word liquidity here. Also, it's got Ford, right? So Ford and open door are both affordable uh, options or affordable options chains as well as high liquid markets, right? Who doesn't know Ford? The automaker, right? But their share price is not that expensive. So if you wanted to do covered calls, cash secured puts on that, you could afford it. And because of how much liquidity is there and the option pricing, it's just kind of an income generative engine. Now it's got a fair amount of those shares, not a lot, but a fair amount because they're only about 14 bucks a pop, right? So let's see what it did here. So the agents, yep. So they started off with the open door shorts that I brought in. It's got a cost basis of $3.88 a share, even though that the stock price entry is $6.20. Because yeah, I bought it on a bullish day, but I've been basically trading it down for who knows how long now. So it's the cost base is actually really low. So at $4.49 at the for open door today, it's still sitting roughly in decent gains, right? Maybe, I mean, 388 to, yeah, it's a decent size amount of gains. I don't want to get too specific about numbers here. And then it's also, let's see. And then Ford, of course, like I was saying, and it picked up a Ford cash secured put expiring July 24th, sold for, how many puts? Doesn't matter how many puts it bought. But it sold the credit, and each credit was worth 25 bucks. So that's great. If you sold one, great. If you sold 10, you're looking at 250. If you sold 20, then you're looking at 2,500 in credit, right? If you were to keep adding zeros. So it's currently marked down at about 38% profit. So it's almost there for it to already take profit off that, off those cash secured put positions. And also it bought a put on NIO, which is new. I need to really look into that. But that one's expiring the 24th, and it sold, let's say 10 contracts for like 19 credit each. So that's not bad for basically a week worth of hold on a low likelihood from what it says of getting assigned. Now, so let's move into here. Yeah. Sorry, this area of the pod is not as scripted as the first half because these are just agentic numbers that I'm trying to read off to you as best I can. So now that we have collateral tied up and all that other fun stuff, the agents are having to learn more and more complicated thought processes, and I'm being able to kind of help manage it in real time, making sure that they are actually working as a team. Like that's the kind of what I'm trying to boil everything down here is these agents talk to each other before telling me no. Because they can figure this out. Like all these doors are already open. So if it hits a stop of some sort, I want it to go and talk to one of its coworkers before it prompts me in dispatch for some reason. So we got a lot of reconciling to do, transfers, blah, blah, blah. So early next week, we'll get some better numbers on my end, and we'll keep talking about the agents and how well they're doing. And yeah, they're making profit. Yeah, now they're making stable income working the most stable income strategies in stock investing, ETF investing altogether. If you could run the wheel strategy on meme coins, you'd probably make a living. I don't know. You can't do that because it's very volatile and there aren't no options on it. So options are difficult, but they're less difficult if you have a computer running it for you, especially if the computer is running a system that's actually working. There's so much data out there on how to run that wheel strategy. Now, if you want to run it for yourself, you can too. I've done it to just basically run income, right? So now I'm just going to let it do that kind of stuff for me. So there's let's see. Yep. So it seems like both. So they have NAV because I moved capital here and there. Blah blah. Blah. It doesn't matter. So Thursday it's up about 2% on the sleeve 1, and sleeve 2 is down about 4.1%. Right. So it sort of washes out. Right. And then sleeve 3 brought in some instant profit. Right. Because if they get assigned or called away, fine, then we just run it over. Right. So once you get your credit, it's yours. Poof, it's in your pocket. and then the options do what the options do, right? You hopefully, actually, there's only one rule to the wheel or selling options, right? Because you have buying options and you have selling options, puts or calls, doesn't really matter. But the wheel is based on selling options, right? So you're selling the option to buy this, or I'm selling you the option to buy my stuff for a premium of some sort, whether it's a lot or a little, right? It's just what I'm agreeing to rent out that money for, whether it's the or capital or even the position. Like it's got to be 100 shares or something though. So each cash secured put or covered call has to be 100 shares. 100 shares exactly. And then you can make that agreement with your brokerage and the rest of the trading universe. Whew. Now that was a lot of very confusing gobbledygook. I will get much better at talking about the agentic desk. But honestly, this is all just really new to you, to me, even to people that I'm trying to explain it to here at home, right? Because I'm having lots of interesting conversations that I'm actually having to, well, explain my thought process of how this works. So, like you, I'm at home and I do my thing and I type and I think and I type and I think and I smash my keyboard when it's frustrating and I high five my screen when it's doing a great job. But none of that requires talking on my end, right? So sometimes when I have to explain it, I'm like, wait, now I actually have to talk about it. And I'm like, shoot, I can't even pronounce certain words sometimes, which is so hilarious. But let's get into our outlook for next week. We're running about 1 hour and 8 minutes, which is not bad. If you guys are still here, thank you for sticking around. But here's my bullish outlook and the opportunities for next week. The rotation into healthcare and energy isn't done. Merrick just broke out on a real approval, not a promise. If semis stay choppy or even just stabilize at lower levels, the money that came out of tech needs a home, right? We got to figure out where the receivers are, and also healthcare. So cheap relative to tech, real pipelines, real approvals is the logical landing, right? That makes the most sense. We'll run a fresh scan on healthcare names on Monday. Here's the next angle. Energy has a geopolitical bid and isn't going away on one headline, like we said earlier. Oil is above $80 as long as the Strait of Hormuz situation stays tense at all. Refiners are the sweet spot. PSX just proved the thesis, and names like VLO and NPC sit in the same universe. Watch for any de-escalation news, as always, over the weekend, and see if it's going to pull back crude on Sunday. But the risk premium is real for now. Here's the next angle. The wheel is building. Right, so because of the strategy we've got going on there and how all the expirations are going, everything's staying pretty much covered. Premium is collected, clean, reset, ready to go. The open doors were the cost basis were already adjusted to the $3.81 on the Kairos desk, not the portfolio, right? So it's different. Like your cost basis doesn't actually come down in the number when you start selling covered calls against it. So you have to keep your math written down, or for me, the agents keep that math for me. So it's been a profitable week, regardless of how we look at it, regardless of what mistakes we had, regardless of how many mental arguments I got into with this computer. But that's the point, right? We're generating income, trying to create a life for whoever wants to dream up a way to trade with a system one day, and for me. And that's why we're doing this. Once we get the everything functioning, running, where I can ride this puppy at highway speed and it's going to be nice and safe, then I can just let it go and enjoy my year. Right? My goal is to get this functioning and running by the end of the summer, and then I can just hang out with my son and just let it generate income, right? I can just reallocate all the portfolio capital that I have in my current running portfolio that I do myself, and then just enjoy the year. Just, you don't always have to make all these crazy moonshots all the time. Sometimes when you have enough wealth and you have enough capital, you can just live, right? That's what we're shooting for. We're shooting for a way to live. Someone talked about that today on X too. Whole thread. If I remember who it was, I'll try to. Oh, it was Pepe Invests. Oh, I love that guy or girl. No, it's a dude because it's a green frog. It's got to be right. It doesn't matter. The cadence is a dude. But what we're not doing is we're not chasing any kind of thing like Netflix. Like, we don't know what's happening with Netflix. They need to show us they can keep running forever. Like, they're starting to get to the point where Blockbuster was when Netflix started showing up. I think we're going to get someone sniffing out Netflix and be like, hey, let's partner. Oh, we don't want to partner? Well, then we're going to stomp you out like Blockbuster got stomped out by Netflix. So keep your eyes on that. I mean, I know I don't plan on ever cutting my Netflix subscription. Would you? And if you did, what would you use that? What is it, $20 now? I don't really know. It's just, you kind of, if you're going to do streaming, you just, Netflix is part of the deal. But no chasing of anything, right? No, without any kind of signal, the agents don't enter and I don't enter. Everything needs price stability first. There's no chasing semis on any kind of bounce. The structural trend is broken this week. And, well, it's been breaking down for the last few weeks if you were listening. And so we want a confirmation before we get anywhere near back in, and we need some sort of catalyst. So I'm going to wait for, if I'm going to pick up more Intel shares at all, I'm going to wait for a pullback to a nice support area. Maybe we'll talk about more about where we're going to find that throughout the week. I don't know yet. But I'm not going to force anything on the agents or myself, right? I'm going to let them do their thing, run their system. I'm going to run my own system, and I'm going to enjoy my life because that's what it's all about here. Just because there's empty slots in the agentic desk doesn't mean you got to fill them, right? They're profitable. Let them run. It's better to have perfect or close to perfect, right? 67% scoring. Wait for that entry than getting something 60% and, well, having that thing just take out money. Like, if you want to just burn money, burn money. So if you don't, then you got to make sure that your system that you trade personally or your agentic system that the agents trade follows a discipline because you don't want to just burn money. Whew. Now, that was a longer podcast than usual. I appreciate you sticking around. I hope you like my new intro. I really liked it. I'm going to play my intro one more time just because it's so cool. Heads up, intro coming up. Boom. That's so cool. So good. Oh, I had to. It's so good. Thank you for sticking with me through that. I hope you are enjoying the intro as much as I do. I'm just so excited to always get these little new upgrades for you, for me, to keep it engaging and keep it exciting. At the end of the day, when we boil this down in our closing, we're talking about numbers and money. It can be very boring. So I do my very best to keep it fun. Some lights, some color, a little bit of charisma. Because honestly, if not, then I just sound like some boring guy on the TV trying to talk about things that are just not interesting. I want to keep things interesting for you because it's interesting for me. And if it's a way for you to make a little bit of income on a little bit of knowledge, I want that for you. But with the markets rewarding people who weren't in the wrong place, semis, Netflix got hit, right? Like we said. If you weren't concentrated there, you kept your money. Healthcare, energy, the banks actually, their balance sheets were fine, or even better than fine. If you were positioned there, you did well. Congratulations. The agentic desk caught that rotation on the equity side. PSX rode the exact energy tailwind we just talked about straight to a clean 8.6% win in 8 days. And we had a real flag on the new wheel desk this week because, well, things like that happened because of the way things got moved around. But that doesn't matter a whole lot because it's going to get reconsolidated next week and the numbers will shake out. And instead of all of that over and over and over, right? I put it right here, right? Rather than just trying to hide it in the background, I want to talk to you about it because you guys need to know the actual process of putting an agentic desk together. That's the deal I made with you. I made it when I started this 6 months ago, over 6 months ago, that I've been doing podcasts almost every Friday for you, for me, because I want to get this out there. I want my friends in the community to have a place that they can maybe check on how the markets are doing. Put a little bit of a side eye there, right? I don't want you guys there trying to do what I do. It's far too complicated to put as much computing mental power into this as much as I do. So if I can get rid of all the nonsense stuff, I think it's better for you that way. Better for you that way, because then you can just run from there, right? Oh, right. And so next week we're going to be watching that position that the agents are holding for 16 days. It's still in profit. It's still following the system. So honestly, I'm probably just going to let it go. But we're also going to watch oil Hormuz headlines over the weekend. Watch for any NVIDIA earnings date drops, because that's going to be very important for the overall narrative that we're dealing with here. So if you're not following, please subscribe, like, follow me on X, follow me on Facebook if that's what you're catching me from. Um, Links are all over the place. I'll try to put some links in the bio, but honestly, I'm really not that hard to find. I'm the only Colin Edsman that exists. So, as always, we're going to try to talk about every trade the agents do, how the NAV decay is working, if there is any. We're going to talk about any kind of red flags that happen, because that's what's going on. And as always, we're going to be talking about the week that was. And this week is done. The bell has rung. And as always, farewell. Ahui ho. Please be safe. Take care of that mental health. And as always, I'll see you on the porch and out there in the markets. Gotta love the shaka, right? All right, gang. I love you.